Hey friends, welcome to the Stratonia podcast. This show is all about strategy, entrepreneurship, and smart business thinking, especially for African founders and professionals. I share lessons, tips, and insights from years of building businesses, and if you want to grow smarter and run better businesses, well, this is your podcast. Today, we will be diving into our blog post, Loan Proposal Mastery, a step-by-step guide for Ghanaian entrepreneurs.
Mm.
Now, securing the finance needed to grow, that can be a real hurdle, can it? Especially for small and medium-sized enterprises, SMEs, right here in Ghana.
Oh, absolutely. It's a major challenge. And that's why this deep dive into our blog post, it's really designed to be a practical resource.
Good.
We want to, cut through some of the confusion and give you a clear understanding of why some loan applications, well, why they stumble.
And more importantly, how to fix that.
Exactly. How you can craft proposals that actually resonate with lenders. Think of it like getting a bit of insider knowledge, understanding what financial institutions are really looking for, and then how to address their key questions, their concerns effectively.
Right, so instead of feeling like you're just shooting in the dark with your loan application,
Mm-hmm.
this discussion should give you a much clearer target. Let's start maybe by trying to see things through the eyes of the lender. What's their main game, really, when a Ghanaian entrepreneur comes asking for a loan?
Well, what's really fascinating here is that their perspective, it fundamentally boils down to protecting their investment. That's number one.
Okay.
They want to be confident in two basic things.
Hmm.
One, that your business is solid, viable, and two, that they will get their money back, plus interest, of course.
So it's not personal.
Not at all. It's purely about managing risk responsibly. It's their job.
Okay, that makes perfect sense. It's not about them trying to be difficult just for the sake of it.
Precisely.
So a strong loan proposal, then it needs to speak directly to that concern, doesn't it? It's got to build that confidence.
That's it, exactly. Our guide highlights these four cornerstones that lenders typically evaluate.
Right.
Viability, profitability, credibility, and security.
Viability, profitability, credibility, security. Got it.
Yeah. And it's just not enough to have a brilliant idea. You need to demonstrate convincingly with evidence that your business stands on solid ground in all these areas.
So it's more than just saying, hey, I've got a good business. It's about presenting a really well-supported case, showing it's built to last, can make money, is run by competent people, and crucially, has safeguards in place.
Exactly. Think of your loan proposal as telling a compelling story. But, importantly, it's a story where every single claim is backed up.
Backed up by what?
By fact, by figures, and by showing a clear understanding of your market. Now let's break down the key sections of this story, maybe starting with the executive summary.
Right. The guide says write this last, but it actually lands first on the lender's desk. It's that really crucial one-page snapshot, what absolutely has to shine through on that first page.
What's critical, really critical, is that it provides a concise snapshot of everything. Your business, your loan request, specifically how much and what it's for, and, most importantly, a clear, tight argument for why lending to you is a sound decision.
It needs to grab them.
It absolutely needs to grab their attention and make them actually want to read the rest of the proposal.
So it's kind of like the headline for your business's funding story. You've got to immediately convey the essentials, who you are, what you need, and why you're a good bet.
You've nailed it. Key elements: business name, location, how long you've been operating, the specific funding amount, and the precise purpose of that loan.
The guide gives that example, right? The tailoring business.
Yes, a really clear one. A tailoring business in Ho looking for GHS 25,000, and they specify why, for industrial sewing machines and fabric to fulfill secured school uniform contracts.
And they projected the impact.
Exactly. Projecting a 40% output increase and even creating a new job. That level of specific detail right there in the summary, it's incredibly powerful.
It really paints a vivid picture of exactly what that loan will achieve. Okay, so you've got their attention with a strong summary. What comes next? Where do you go from there?
That leads us straight into the business description. This is where you really flesh out the details of your operation. Think of it as properly introducing your business to the lender.
So this is where you explain what your business is, fundamentally. Where it's located, who the owners are, the legal structure, sole trader, partnership, whatever, and what makes your business unique, particularly within the Ghanaian context.
Precisely. And don't just give a generic overview. Be really specific about what you do, who you serve, and what your unique selling point, your value proposition, actually is.
Should you add anything personal?
Briefly sharing your founding story, maybe, and definitely outlining your vision and mission that can help the lender connect with your business on a slightly deeper level.
The guide mentions Akasua Foods in Cape Coast. That example stuck with me. A registered sole proprietorship, processing dried fruits, aiming for the local market, but with national ambitions.
Yeah, that gives a good sense of their current scope and where they want to go. It's clear.
Okay, what's the next piece of this proposal puzzle?
Next up, we have the management team section. And this is crucial because lenders, remember, they aren't just investing in an idea. They're investing in the people who will make that idea happen.
Right, so this is where you introduce the key players. You highlight their relevant skills, their experience. It's definitely not just a list of names, is it?
Absolutely not. That's a common mistake. For each key person, you need to briefly outline their relevant experience, their achievements, and how their specific skills contribute to the business's success.
So things like titles, years of experience.
Yes, titles, years of experience, any relevant education, past successes, and very importantly, if there are any gaps in your team's expertise, and there often are in SMEs, acknowledge them.
Be honest about it.
Be honest, yes, but also explain how you plan to address those gaps. Maybe it's through hiring someone new, maybe training, maybe seeking mentorship or advice.
Like the example in the guide. Kwame Asidu, the CEO with a catering diploma, 5 years in business, supported by a part-time bookkeeper, but also with a clear plan to work with an NBSSI business coach.
Exactly. That shows good self-awareness and a real commitment to building a strong, capable team. It addresses potential lender concerns proactively.
Okay, very clear. What's the next critical area lenders are going to scrutinize?
Following the team, we get into the market analysis. This section is all about demonstrating your understanding of your customers and the competitive landscape you're actually operating in.
So this is where you prove you've done your homework. You know who you're selling to, who else is trying to sell to them, and crucially, why customers pick you.
Precisely. Describe your target customers in clear terms. Are they young professionals in Accra? Market traders in Kumasi? Be specific. Explain why they would choose your products or services over the competition.
Define your ideal customer.
Yes, identify that ideal customer profile. Then try to estimate the size of your potential market, whether it's local or maybe even national. And definitely outline your key competitive advantages. What makes you different? What makes you better?
The guide had that natural juice business example in Accra. Competing with the big brands, sure, but highlighting their specific advantages. Fresher products, maybe better packaging, mobile delivery.
Exactly. That clearly shows they understand their niche and how they differentiate themselves within that busy market. It's convincing.
Right. So, after market analysis.
We move on to the loan request and purpose section. Now, this might seem straightforward, but clarity and precision here are absolutely key.
Okay, so this is basically just stating how much money you need and exactly what you're going to spend it on, right?
Yes, but you need to go beyond just stating the total amount. Provide a detailed breakdown. Itemize how the funds will be allocated. And crucially, you must clearly link how this specific investment will directly contribute to generating future revenue.
Show the return on their investment.
Precisely. And if you can, attaching supplier quotes for any significant purchases like machinery or vehicles adds a really strong layer of credibility and realism.
That example of requesting GHS 30,000 with a clear breakdown, so much for delivery tricycle with quote attached, so much for inventory, so much for branding, that really illustrates the level of detail lenders want to see.
It does. It leaves no room for ambiguity.
Okay, next up is arguably the section that gets the most scrutiny, financial information.
You're absolutely right. This is often the make or break section. This is where you provide the hard evidence that your business is financially sound and, most importantly, capable of repaying the loan.
Honesty and realism are key here, I imagine.
Paramount. If you have past financial records, things like profit and loss statements, balance sheets, cash flow statements, maybe for the last 1 to 3 years, those are essential. Include them.
That shows the track record.
Exactly. Historical data provides that track record. Then, building on that, you need to provide realistic financial projections for the next, say, 3 to 5 years.
Projecting what exactly?
Detailing your anticipated income, your expenses, your profits, and critically, your cash flow. Lenders pay very close attention to your projected cash flow.
Why cash flow specifically?
Because cash flow directly indicates your actual ability to meet those loan repayment obligations month after month. Profit is good, but cash is king for repayment.
And the guide emphasizes explaining the assumptions behind these projections. That seems important.
Very important. If you're forecasting a, say, 25% jump in sales, explain why. Is it because of the new machine the loan will buy? Is it a new market you're entering? Be explicit about your reasoning.
That transparency builds trust.
Absolutely. And look, if you find this financial part challenging, don't hesitate. Get help. Talk to an accountant, a business advisor. It's worth the investment.
That example in the guide, the business with GHS 72,000 revenue last year, 18% profit margin, but projecting a 25% order increase leading to a specific GHS 2,000 monthly net profit once the new machines are in. That's the kind of detail that gives confidence.
It really does. It shows you thought it through.
Okay, so following the heavy lifting of the financials, we get to the repayment plan and collateral. This is where you explicitly state how you'll pay them back.
Exactly. You need to clearly state your proposed repayment schedule. How much are you planning to repay each month? Over what total period? For instance, GHS 1,500 monthly for 24 months.
And link it back to the financials.
Crucially, yes. You must show how these proposed repayment amounts align logically with your projected cash flow that you just detailed. And then there's collateral.
Security for the lender.
Right. List any assets you're offering as security. Maybe it's land titles, a registered vehicle, specific equipment. Be specific about the asset, its estimated value, and provide any relevant documentation you have.
So linking your repayment ability directly to your projected income and then offering tangible security on top of that. That makes the lender feel much more comfortable about the risk.
Significantly more comfortable. It addresses their core concerns head on.
Okay. Finally, we have the supporting documents section, basically the appendix of your proposal.
Think of this as your evidence file, your backup. This is where you include all the documents that actually support the claims and information presented throughout your proposal.
What kind of documents are we talking about typically?
Well, the guide provides a pretty comprehensive checklist. Things like your official business registration certificate, your TIN certificate, any relevant permits or licenses needed for your industry.
Personal ID, too.
Yes, owner's ID, definitely. Supplier quotes for the things you plan to buy, past financial statements if you have them, recent bank statements.
That sounds like a lot of paperwork.
It can be, which is why the advice to keep it well organized is so important. Use dividers, label things clearly, and make absolutely sure all documents are current and relevant. You don't want outdated permits or expired IDs undermining your credibility.
Good point. A messy appendix sends a bad signal. Now, beyond the actual written proposal document, the guide also touches on presentation and professionalism. That matters too.
Oh, absolutely. The overall presentation of your proposal speaks volumes about you and your business. Ensure it's neatly formatted, easy to read, and completely free of grammatical errors and typos.
Little things count.
They really do. Use clear headings, bullet points to break up long paragraphs, make it easy for the lender to navigate and find information.
And it's not just the document itself.
No.
Yeah.
You need to know your proposal inside out. Be prepared to discuss any aspect of it confidently, especially those financial projections. They will ask questions.
You need to own your numbers.
You absolutely have to own your numbers. And finally, when you actually submit the proposal, or if you get a meeting with the lender, your attitude, how you conduct yourself, that matters immensely. Professionalism, responsiveness, being prepared, it all leaves a lasting positive impression.
It's the whole package.
It really is. Ultimately, crafting a strong loan proposal, it's a skill. And like any skill, it develops over time with practice.
It's not just about filling forms.
Not at all. It's really about telling the story of your business, but telling it in a way that directly addresses the lender's primary concerns, minimizing their risk and ensuring they get repaid.
Yeah.
Seen that way, it becomes a powerful tool for unlocking the funding you need to achieve your growth ambitions.
So the bottom line here seems to be that a well-prepared, thoughtful loan proposal isn't just, bureaucratic paperwork. It's actually a critical key for Ghanaian entrepreneurs seeking investment.
Absolutely critical.
It demands that clear understanding of the lender's perspective we talked about, plus a detailed, well-supported presentation of your own business's strength and future potential.
Which actually brings up a really vital question for you listening right now. Considering all these key sections we've just discussed, the executive summary, the business description, market analysis, financials, repayment plan, which specific area do you think might require the most focused attention for your business right now as you think about funding?
That's a great question.
And maybe take it a step further. What's one specific piece of information or maybe one document that you could prioritize gathering first to immediately strengthen that particular section of your potential proposal? It's definitely worth taking a moment to reflect on that.
Some really valuable food for thought there. A practical next step. Thanks for joining us for this deep dive on the Stratonia podcast. We Really hope this discussion has provided you with some clear, actionable insights for your own funding journey.